the same powerful global forces that were moving stocks today also having an effect, obviously, on energy and gold, as Deborah mentioned. Oil surging today over concerns that unrest in the Middle East and North Africa could disrupt supplies. Gold soaring to what is mainly viewed as a flight, as Deborah said, to safety. Gold futures reaching a record high of more than $1,433 an ounce in trading today. And Federal Reserve Chief Ben Bernanke, though, acknowledged that the trend in his inflation in the Senate testimony this morning. Listen into what he had to say.
Sustained rises in the prices of oil or other commodities would represent a threat both to economic growth and to overall price stability, particularly if they were to cause inflation expectations to become less well anchored.
All right. My next guests are veterans of the commodities markets. John Licata is Chief Commodity Strategist at Blue Phoenix. And we also have Frederick Fromm. He is a portfolio manager at Franklin Templeton Investments. Good to have you with us, gentlemen. Let me start with you, John Licata, here in New York with me. You listened to Ben Bernanke speak. What is he talking about? He talks about unanchored expectations. Prices are going up, right? That's it.
Prices are certainly going up, and I think what he was referring to is we started to look at the price of gasoline starting to reach $4 a gallon in some regions. And here we are, it's not even summer driving season. So I think the expectations are the prices will go higher, especially if we get a hurricane season, all that kind of stuff, combined with what's happening in the Middle East. It's that sort of pricing pressure that I think could actually derail a U.S. economic recovery. And I think that he was referring to if these prices by energy companies continue to rise, they're going to try to look to pass those costs over to consumers. And based off of last week's CPI, it seems like the consumers seem like they're more willing to actually pay. So it's be interesting to have as this unveils as we enter the summer months.
Frederick Fromm, how much of the price increase in commodities has to do with the weakness in the U.S. dollar? Because if it's priced in dollars and it declines in value, that means the nominal increase is going to be reflected in the number. But that doesn't mean if you're, let's say, trading euros or live in euros, that necessarily is the case.
Well, I think that's, thanks for having me first off, and I think that's pretty tough to ascertain exactly because there's so many other factors that play into the price of oil and, obviously the unrest in North Africa and the Middle East and fears of further spreading in the Middle East is the primary factor driving oil right now. And we've seen it rise about, at least as measured by the WTI price, about $10 per barrel since the unrest began at the beginning of the year. So I think that's the primary factor driving the price. The dollar does, of course, have an impact because to the extent the dollar weakens, the oil does not go up in price in other areas of the world. I'm not sure that actually drives demand as much as helps blunt the impact of rising prices in dollar terms.
Frederick Fromm, is this also being caused because there's a supply-demand imbalance as the global economy grows?
Yeah, there's no question that that is the view that will eventually happen. But I think near term, we were looking at things being fairly balanced. Inventories were not that bad on the commodity side or the product side, as well as the crude oil side as well. But I think it was more the view looking towards the future of what was going to happen as demand continued to grow. We had robust global demand growth last year in demand for crude oil. And also in the U.S., we grew at about 2% in 2010. If that was going to continue for the next couple of years, we were going to draw down that excess production capacity that OPEC is having to employ right now to offset Libya. And so what we've actually seen is a pulling forward of what was probably going to happen anyways, and that's why oil had risen to about, I think, the $80 to $90 level prior to the crisis, was simply people looking forward saying, hey, things are going to tighten up, supply and demand balance is going to tighten up, and prices will eventually rise to at least current levels, if not higher.
John Licata, I want to give you 30 seconds. We're going to continue the conversation. What about Saudi Arabia? Can they make up any difference in the supply of oil?
I think that they are fooling, or at least trying to fool the world that they can add as much capacity as they've been saying, Pimm. It's my opinion that the Saudis are actually struggling. I think that's one of the reasons why we've been hearing more and more talk about the Saudis start to look at solar. Do they have a lot? Yes. Do I think they can add? I think that's questionable at this point.
And it also has to do with the type of oil that they dig out of the ground, get out of the ground in Saudi Arabia. It's not as easy to refine in some cases.
Well, that's a great question because they've been refining it outside their own country.
All right. John Licata, I know that you spent some time in the Middle East in 2010. What is the significance of Saudi Arabia moving tanks into Bahrain? And make the point that you were just discussing off camera, that things can change incredibly quickly nowadays.
Well, first of all, I mean, look at just the price of crude oil in the past week and a half. I mean, it's been up in a New York Minute north of $15. That spread between WTI that's trading here in New York versus Brent, which the rest of the world.
That's been trading over $100 for a while, right?
Right, but now we're actually starting to see that spread starting to narrow with the WTI starting to increase. What you and I were discussing was Bahrain is actually a very strategic place to be. I mean, we actually had the Persian Gulf War about what happened in Kuwait. Could Bahrain end up being the next Kuwait? And I don't think it's so far-fetched. Tensions can spill over.
Well, you got the U.S. Fifth Fleet is based in Bahrain.
Never mind our presence there. The fact that there's so many uncertainties from a geopolitical perspective and a lot of civil unrest on the ground. You know, there's been talk about what's been happening in Bahrain, potentially affecting oil supplies in Saudi Arabia. And if those supplies start to get ruined, or any sort of disruptions happen along the Strait of Hormuz, where over 40% of the world's oil flows through, I think that's where we start to say, is with the levels where we are right now, will we be saying we wish we would here 6 months from now, especially with gas where we are right now, Pimm? You know, most people start to say, do we pay $4 going into the summer? We're starting to see that now. I mean, the refineries are producing less. It's my opinion that we're setting ourselves up, unless we come up with, you know, President Obama makes all these wonderful points about alternative energy, yet yesterday we, you know, make a grand move about one drilling license. And what you and I were discussing was, if this was $80 crude oil, this doesn't happen. So I think that the fact that it happens now is too late. It's kind of like that wonderful buoy in the water. But there's so many other permitting companies that could be, you know, valuable right now, and you know, and that coupled with the Canadian oil sands, we have the potential that, and with plenty of natural gas in our own backyard, to be, you know, relying on domestic production or North American production. Instead, you know, what's happening in the Middle East is something that, you know, no one wants to speculate what the worst case scenario is. But I can tell you the price will be extremely higher than where we are right now.
Well, I'm glad you mentioned what's going on in North America and Canada, because I want to bring Frederick Fromm into this. And Frederick, what about investing in companies that are looking at places like Canada and the United States for their reserves? For example, the Athabasca oil sands region in Western Canada. Is that the region to be looking for at least investments?
Well, clearly, the oil sands do hold a very important place in the global supply, but particularly in North America, because of their long life. Some of these have reserve lives of 40+ years, and they can develop additional resources to have that even go longer. So there are some opportunities there. Some of the areas where we've been finding the best opportunities has been on the exploration and production companies that are focused on producing oil, because there really is, not just in Canada, but which has been an oil producer for a long time, as the U.S. has, but there's been a renaissance in oil production in the United States, and we've seen a lot of new exploration and production companies be formed, names like Concho, Brigham Exploration, Oasis, SM Energy, that is starting to shift more towards oil. And the oil rig count in the United States is at a 20-year high right now. So we're really trying to take the bull by the horns here and improve our supply situation in the U.S. But I think, as the both of you were discussing, in the Gulf of Mexico, you know, we're actually losing production in the Gulf of Mexico. It's declining. Companies have been reducing production estimates because of the moratorium in the Gulf of Mexico. So, you know, we need to get more permits approved. This was a good start with Noble Energy, which is a company we own. But I agree that there needs to be more on that front.
So, John, what about some of these oil service companies? I know you've been following the fortunes of, let's say, Weatherford International. What about a company like that?
Well, I mean, these are names that I follow. I don't put formal views on them, but, you know, I actually think that Weatherford is a fantastic company. Over 30% of their revenues come from North America. I like them for their exposure in North America, as well as their exposure overseas. What I think, Pimm, is that many of the real opportunities to play any recovery in offshore deep water is going to come from the service names. Companies like Carbo-Ceramic, which makes ceramic proppants that help facilitate the fluids coming out of the ground. Companies like Apache, which you and I have spoken about on numerous occasions.
Apache, and specifically, they've got big holdings off the coast of Egypt.
And I like Apache for more than their exposure to Egypt, although I am intrigued by what's happening. But they also have a very intriguing problem. They just recently acquired Mariner Energy in 2010
right.
for their shallow presence in the Gulf of Mexico. It's my opinion that if we're already starting to bring new licenses back offshore, deep water, I think maybe the shallow could be a really interesting play. And that's why I think Apache might be a very interesting name. But Weatherford certainly is a name that could benefit. And I do think, Halliburton has been very forthcoming with saying that they expected North American service to improve. They just said that on their recent conference call. So I think, to me, it's the service names that could actually be the biggest opportunity going into the summer.
All right, so you've got the service names, Halliburton, Weatherford. When you pull back, what about natural gas? I mean, because we keep talking about how we got an abundance of natural gas here in the United States. Natural gas prices kind of flat, below $4 per million BTU.
I'm glad you brought that up because, you and I have had many conversations on natural gas. I am not in the camp that thinks that we can extract so much natural gas. I think there's a lot of problems, a lot of purification problems with water.
There's a big story in the New York Times over the weekend having to do with environmental effects.
Certainly there was. And you and I have been talking about that for more than a year now. So, and it's not new, but yet we keep relying on natural gas. And the historical discount is that natural gas trades at 10 to 12 times crude oil. And here we are north of 20. I think it's time to take a look at it.
I got to thank you right there.
Thank you.
John Licata, Blue Phoenix, as always, a pleasure to get your insights. Frederick Fromm coming to us from Franklin Templeton. Thank you for your participation.